Have you ever wondered how one man could amass a fortune of $85 billion? Yes, I'm talking about Warren Buffett, the Oracle of Omaha. Born into the quiet heartland of Omaha, Nebraska in the year 1930, Warren Edward Buffett was far from an ordinary child. From a tender age, he exhibited a keen interest in the world of business. While other children were engrossed in playground games, young Buffett was busy making sense of numbers, profits, and investments. His first foray into the business world was at an age when most of us are still navigating middle school. Believe it or not, Warren Buffett made his first investment at the age of 11. He purchased shares in a company called Cities Service Preferred for $38 per share, eventually selling them for a small profit. This early venture into business was not just a passing whim, but a solid indication of the financial magnate he was destined to become. After high school, Buffett didn't rest on his laurels. Understanding the importance of a strong educational foundation, he enrolled at the Wharton School of the University of Pennsylvania before eventually transferring to the University of Nebraska. There, he earned his bachelor's degree in business administration. His insatiable thirst for knowledge led him to the hallowed halls of Columbia Business School. It was here that he encountered Benjamin Graham, the man who would become his mentor and shape his investment philosophy. Studying under Graham, Buffett learned the principles of value investing that would guide his future career. This was the beginning of a remarkable journey. A journey that saw a young boy from Nebraska's fascination with numbers transform into a financial empire that spans the globe. But this leaves us with a burning question. How did Warren Buffett, the child who bought his first stock at 11, end up becoming one of the richest men in the world? Buffett didn't become a billionaire overnight. He had a unique approach to investing, focusing on long-term gains over quick wins. This approach was deeply influenced by the teachings of Benjamin Graham, the father of value investing. Buffett was a student of Graham at Columbia Business School, and the lessons he learned there would shape his investment philosophy for decades to come. Graham taught Buffett to view stocks not just as ticker symbols on a screen, but as pieces of actual businesses. This perspective was revolutionary. It forced investors to think long-term, to consider the fundamentals of a business, and to invest with conviction. This philosophy became the cornerstone of Buffett's investment approach. He looked for businesses he could understand, those with strong competitive advantages and a history of stable earnings. He wasn't interested in the latest tech sensation, but rather in solid businesses that could withstand the test of time. Buffett would often say, "I buy on the assumption that they could close the market the next day and not reopen it for 5 years. This reflects his unwavering commitment to long-term investing. It's not about timing the market, but rather time in the market. Buffett's success stems from patience and consistent investment strategies. One of the most significant aspects of Buffett's philosophy was his focus on value. He sought out companies that were undervalued by the market, those hidden gems that others overlooked. He believed that the market's short-term fluctuations often created opportunities to buy great businesses at a discount, turning volatility into a powerful ally for long-term gains. But it wasn't just about finding a bargain. Buffett believed in investing in businesses he had faith in. He would often say, "It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price." Buffett's approach to investing was not about chasing quick profits or getting rich quick. It was about patience, understanding, and belief in the intrinsic value of a business. This philosophy may not have made him a billionaire overnight, but it laid the foundation for one of the most successful investment careers in history. So Buffett's approach was not about quick profits, but about long-term value. But how did this translate into billions? Buffett's investment philosophy was unique, but how did it make him a billionaire? Now, that's a question worth exploring. The story of Warren Buffett's transformation into a billionaire is deeply intertwined with one company, Berkshire Hathaway. But it wasn't always a golden goose. In fact, it started as a struggling textile mill in the 60s. Buffett, ever the contrarian, saw potential where others saw failure. He invested heavily in Berkshire Hathaway, eventually buying the entire company. Through his shrewd business acumen, he transformed this failing textile mill into a powerhouse holding company. Today, it's a multi-billion-dollar conglomerate that owns businesses in a wide array of industries, from insurance to energy and even candy manufacturing. But the road to billions didn't stop there. Buffett's major investments tell a story of patience, foresight, and belief in the value of good companies. Take Coca-Cola for instance. Buffett invested in the iconic beverage company back in 1988, at a time when it was experiencing a slump. He saw the enduring appeal of the brand and the value of its global distribution network. Today, Coca-Cola is one of Berkshire Hathaway's most profitable investments. Then there's American Express. Buffett invested in the company during a scandal in the 60s, when its reputation was at an all-time low. He believed in the company's ability to bounce back and was handsomely rewarded for his faith. And let's not forget about Apple. Buffett, who once claimed to not understand technology companies, made a major investment in Apple in 2016. This investment has since grown exponentially, contributing significantly to his wealth. These major investments are a testament to Buffett's unique investment philosophy. They showcase his ability to see the value in companies that others often overlook, and his patience to wait for his investments to bear fruit. Buffett's wise investments and business decisions helped him accumulate his wealth, but what can we learn from his journey? Stay tuned as I delve deeper into the lessons from Buffett's road to billions. Buffett's journey offers important lessons for anyone interested in wealth accumulation. What stands out is his approach to investments. He's never been one to jump on the bandwagon of the latest trend. Instead, he insists on understanding the business he invests in. He once quipped, "Never invest in a business you cannot understand." This simple yet profound wisdom reminds us that knowledge is power, especially when it comes to investing. Another key lesson is patience. Buffett didn't amass his wealth overnight. His story is one of steady, consistent growth over decades. He embraced the power of waiting for the right moment, rather than rushing into decisions. He is a firm believer in the buy and hold strategy, demonstrating the value of long-term investing over short-term speculation. It's a lesson in the art of patience and the power of time in the realm of investing. And speaking of time, let's not forget the magic of compound interest, often dubbed the eighth wonder of the world. Buffett's wealth is a testament to this force. Starting early and consistently investing allows your wealth to grow exponentially over time. So, what can we glean from Buffett's journey? Understand your investments, be patient, and leverage the power of compound interest. But remember, these aren't just lessons in wealth accumulation. They're lessons in life too. Buffett's wealth is not just about money, but about wise choices and patience. But here's a question for you. If you had $1 billion, how would you invest it? Imagine, just for a moment, that you're sitting on that kind of capital. What would your strategy be? Where would you put your money to work? It's a fascinating exercise, isn't it? Think about it and share your thoughts in the comments below. And for more insights on rich and poor choices, do check out my playlist, showing up on screen for you right now. Until next time, remember, wealth is not just about money, but about making wise choices. Keep making smart choices and I will see you in the next video.